Something big just happened, and it could shake the foundation of the US dollar, your investments, and the entire global economy. President Trump has fired off tariff letters to 100 countries, threatening 50% penalties unless they accept strict American trade rules. And he says more letters are coming. But instead of falling in line, nations are pushing back, hard, especially BRICS and its growing circle of allies. Treasury Secretary Scott Bessent proudly called these letters warnings, not negotiations. But what he doesn't realize is this: the world no longer fears the United States like it used to. The market reaction was instant. The S&P 500 sank. Nasdaq and Dow Jones followed. Analysts now estimate Trump's tariff push could cost the U.S. economy over $432 billion by 2029. For everyday Americans, that could mean an extra $2,100 in annual costs, driven by rising inflation. And while Washington picks trade fights, China is playing chess. In just 8 months, it dumped $12 billion in U.S. debt and bought over 34 metric tons of gold. More than 37 countries are now settling trade in Chinese yuan. BRICS economies have overtaken the G7, and they're not stopping. Even German pension funds are pulling cash from the U.S. and betting on China. This isn't just a trade dispute, it's a power shift, and the U.S. is on the losing end. Are we watching the fall of American dominance in real time? Let's break it down, because what comes next could change everything. This is how it began this week. Scott Bessent stormed out of a Washington briefing room, face red, tie crooked, papers clutched tightly, and he announced that they had finally sent out the 100 letters. These letters, sent to 100 countries, aren't invitations to talk. They're ultimatums, threatening tariffs not seen since the 1930s Great Depression. Which is interesting because the last time any US president did this, what we had was the worst recession in history, so why is Trump thinking it will be a good idea this time around? The Peterson Institute warns these could slash US GDP significantly, dragging the world into a trade war nightmare. Yet the response from most nations? Dead silence. Vietnam, Korea, and Mexico, reliant on US exports, might squirm. But 63 countries now trade more with China or India than the US, per Bloomberg's global trade trackers. This isn't defiance, it's indifference. The world is moving on, and America is left shouting into the void. Because of this, there's a 40% chance the US is staring down a recession in the next year, and the culprits are clear. New tariffs, policy flip-flops, and a government shakeup that's sowing chaos. These tariffs are a gut punch. They're jacking up prices, snarling supply chains, and eating away at people's real incomes. Businesses can't plan when tariff plans change like the weather. Maybe the weather is even more predictable at this point. Investments are stalling, and confidence is crumbling. Add to that the federal government's layoffs and the disruptions from the new Department of Government Efficiency, and you've got a recipe for stagnation. This isn't streamlining, it's a wrecking ball. Then there's the fiscal mess. A big legislative package has been passed, but don't expect miracles. Extending the 2017 tax cuts might sound nice, but it's a wash. Any extra tax relief is likely to be overshadowed by spending cuts that'll squeeze demand. The economy's already wobbling. These moves could tip it over. Folks, this is a wake-up call. The US can't afford to stumble blindly into a recession. Businesses need stability, not policy whiplash. Families need relief, not higher prices. If we don't course correct, the ripple effects, job losses, tighter budgets, global uncertainty, will hit hard. Trump's tariff plan is a masterclass in confusion. First, the deadline was July 7, 2025. Then, August 1st. Now Bessent calls it a signal, not a deadline. This flip-flopping isn't strategy. It's chaos. Markets are spooked, with the S&P 500 crashing intraday when Bessent's words hit Bloomberg terminals. J.P. Morgan slashed 2025 global GDP growth forecasts to 1.6%, citing this policy mess. Investors aren't scared of tariffs. They're terrified of the uncertainty. Every delay, every vague threat sends shockwaves through global markets. While Trump swings wildly, BRICS is playing a smarter game. The bloc, now including Egypt and Iran, controls 44% of global GDP, up from 18% in 2000, and could hit 46% by 2026 with new members like Indonesia and Saudi Arabia, per IMF projections. Trump's latest directive, a 10% penalty tariff on anti-American BRICS policies, is a desperate jab at a term so vague it could target NATO allies like Germany for trading in yuan. BRICS isn't just growing, it's building a parallel trade system, free from US control. China's projected to account for 19% of global GDP by 2029, and its commodity-based trade networks are pulling nations away from America's orbit. This isn't a trade spat, it's a geopolitical earthquake, and BRICS is rewriting the map. Vietnam's recent move to join the BRICS Plus alliance as a partner nation sends a clear message. The Global South is charting its own course, and it's done playing by someone else's rules. With 20 members and partners now, including rising economies like Nigeria and Vietnam, BRICS Plus has grown into a major global force. According to IMF data, this expanding bloc holds a significant share of the world's economic power, and it's no longer something the West can afford to ignore. This isn't just about numbers. It's about a quiet rebellion against a world order that's long been dictated by a few. The United States has been pushing hard to pull countries like Vietnam into its orbit, dangling promises of trade and investment to pry them away from China. It's called friendshoring, a fancy term for rerouting global supply chains to sideline Beijing in a new Cold War. But Vietnam isn't playing that game. By joining BRICS Plus, Hanoi is doubling down on its non-aligned stance, echoing the spirit of the non-aligned movement from decades past. This should raise alarms in Washington and beyond. These nations want trade, growth, and respect on their terms, not as tools in someone else's strategy. For too long, global powers have assumed they can dictate the rules. But with nearly half the world's economy now in the BRICS Plus corner, the game is changing. The West needs to wake up, listen, and rethink its approach before it's outplayed. The US dollar, which was once the world's unshakable backbone, is crumbling under Trump's recklessness. Bloomberg reports 37 countries have adopted yuan-based trade since 2023, with Brazil and Argentina bypassing the dollar for 40% of their China deals. Foreign purchases of US treasuries plummeted in the last year, with China alone dumping $12 billion. Its fastest sell-off since 2016. While central banks of several countries dumped $48 billion as they moved away from the US dollar. Why? Less trade in dollars means fewer dollars to recycle into US bonds. As Treasury demand collapses, borrowing costs soar, threatening a debt crisis. Meanwhile, China's stockpiling of gold, 34.2 metric tons in 8 months, is because it trusts hard assets over America's political circus. The dollar's grip is slipping, and Trump's tariffs are pushing it off the cliff. To show that nations around the world are no longer scared of the US, China slapped 125% duties on US goods in April, calling Trump's tariffs a joke. Canada hit back with 25% tariffs on $20 billion in US exports, eyeing $85 billion more. So why does Trump think they would not do the same thing again, now that he is renewing the threats of increasing tariffs? Mexico and Brazil are gearing up for their own counterstrikes, with Brazil's President Lula threatening to suspend trade pacts. The Tax Foundation estimates these retaliatory moves could cut US GDP growth by 0.9% in 2025, doubling the economic pain. American importers, reliant on $3.1 trillion in foreign goods, face skyrocketing costs for electronics, batteries, and auto parts. This isn't a negotiation. It's a global backlash, and the US is woefully unprepared for the blowback. So, where does this leave us? Well, you need to brace for an inflation nightmare. President Trump's tariffs are squeezing the life out of America's poorest families, and it's time we sound the alarm. Yale's Budget Lab just dropped a bombshell report showing how these tariffs are hammering low-income households the hardest. The bottom 10% of earners are losing 2.5% of their disposable income, money they barely have to spare. That's not just a statistic. It's a gut punch to folks already scraping by. The report lays it bare. Tariffs act like a regressive tax, hitting the poor far worse than the rich. While the wealthiest 10% shrug off a 1% dip in their income, about $5,000, pocket change for them, the poorest families are losing $2,200 a year. That's rent, groceries, or medicine for people living paycheck to paycheck. Consumer prices are up 1.3%, and everyday essentials like clothes, shoes, and cars are skyrocketing. Footwear costs 31% more, and new vehicles? Try an extra $6,000. For families pinching pennies, these aren't just numbers, they're impossible choices. The report says even when people adjust their spending, the damage lingers. Tariffs aren't just raising prices, they're widening the gap between the rich and the poor. It's a policy that claims to protect American jobs, but ends up punishing those who can least afford it. This isn't abstract economics. It's real people, real pain. We need to ask, who's paying the true cost of these tariffs? It's time to rethink this approach before more families are crushed under the weight of good intentions gone wrong. While America fumbles, Hong Kong is rising as BRICS financial powerhouse. The Hang Seng Index is up 21.3% year-to-date, dwarfing the S&P 500's 6.7%. Bloomberg reports China is planning a $140 billion southbound bond connect, letting its investors buy foreign debt while building a Hong Kong hub that could rival New York. Even European money is shifting east. Germany's KZVK pension fund, which manages over 34 billion euros, recently invested $50 million into Chinese equities, according to Bloomberg. Not American stocks, Chinese. This isn't just a portfolio tweak, it's a strategic pivot. Investors, even conservative ones like German pension funds, are betting on China's rebound. The Hang Seng has been rallying hard since late 2024. And while risks remain, like regulatory surprises and political tension, China is proving it can deliver growth. Meanwhile, America is stuck in chaos and confusion. Political gridlock, trade tensions, and unclear policy signals have shaken confidence. Inflation is rising. Markets are cracking, and capital is fleeing. Trump's tariffs, meant to restore American power, are doing the opposite. They're accelerating the shift away from the dollar and pushing even allies like Germany and Brazil toward BRICS. As Hong Kong lists BRICS bonds and builds out a financial ecosystem independent of Wall Street, BRICS is no longer catching up. It's pulling ahead. The U.S. financial empire, once unshakable, is now under siege from a system it created. The WTO, IMF, SWIFT, all American inventions, are being repurposed for dollar-free trade corridors. China's digital payment networks and the Gulf's yuan-based oil contracts are straight out of the U.S. playbook. Only now they're being used to sideline the U.S. itself. The irony is brutal. America built the very system that's now being used to push it off the global stage. And while Trump postures with tariffs and tough talk, the world is quietly moving on. Will he realize what's happening before it's too late? Or are we watching, in real time, the end of U.S. financial dominance? The clock's ticking, and the world's watching. Make sure you're subscribed so you don't miss what comes next. See you in the next one.